Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and we are going to be talking about currencies, earnings, Japanese yen carry trade, all sorts of good stuff. My image is not right. There we go. Is that working? Can I move this? I screwed it up. Let's try to get this right here. What did I do? Okay. Let's try that again. There we go. There we go. Okay. So we're going to begin with the currency markets because the U.S. dollar has come under a lot of pressure. And we're going to talk about the impact of that is on the equity markets, or could have on the equity markets. We're going to talk about the Japanese yen versus the U.S. dollar because it matters. If you're new to trading and you're saying, I don't know what this guy's talking about with currencies, this, interest rates, that, it's all matters to the direction of the market. The stock market is not a linear mechanism. It's influenced by the bond markets, influenced by the currency markets. So the U.S. dollar at current is gapping lower. By about 0.56%. This is going to rally back. We are currently trading or gapping down below. I believe I have these set up for, third standard deviation Bollinger Band move on a 5-minute chart. This is a 15-minute chart. I'd be $1 here for a scalp, $1 buyer on here as a scalp to the long side, but I would get out very, very quickly, probably up at around one of these two declining moving averages. Now, I want to go to the weekly chart to illustrate what's going on with the dollar. We already have a new weekly lower low. No bueno. So now we want to take a look at the Japanese yen, which should be up. And it is. Wow, this is a big move. This is a big move on the Japanese yen. I'm going to go to a 15-minute view. Major gap up here, 0.81%, and we're off the highs. Again, we're using third standard deviation Bollinger Bands. So we're already a bit extended, but these are only, in this case, 15-minute charts. So we could just consolidate, perhaps retest this breakout point, and then proceed up higher because I think that's exactly where we're going. Let's go to the weekly chart. Big gap up, new weekly higher highs. We have a breakout above resistance. We did that last week. Now we have follow through. So this is very, very bullish price action for the Japanese yen. Let's check in with the what the heck? What did I click here? Let's check in with the euro. The euro gapping up against the dollar as well here, 0.54%. That's a big move. We broke out last week above resistance. Let's again edit this. These price levels are very, very important because they may get retested this coming week. So early on here, very strong price action on euro yen. There's no way the dollar can rally with the euro and yen both up in tandem. Virtually impossible. So we're coming off the highs at current. So we're going into the new trading week with a ton of volatility in the equity market, the currency markets. Let's say hello to folks. Tim, welcome. Lee Cable. We'll be going to them in a couple of minutes. Yeah. I remember we were talking about 100, like I was, yeah. Yeah, now it's reality, right? Sean, welcome. Lots of snow. Everybody gets snow? I've been digging out all day long. Let's take a look at the equity markets because, man, if the dollar's, let's go. Let's go to gold because with the dollar dropping the way it is, it's only going to send gold up higher. Gold opening up about 0.5%. We were higher. We're fading a little bit. I do want to remind people that on a monthly chart, not to be a party pooper, on a monthly chart, gold has RSI greater than 90. Think about it. We're above 5,000. Silver. I don't know what's wrong with me. Too much caffeine. Silver gapping up here, 2.66%, over $100 the ounce. We're coming off the highs now. Palladium up 1.47%, way off the highs of the session. Let's check in with platinum. Platinum now down. They gapped that up. They've now reversed it. This could happen for gold. It could happen for silver. But I don't think they're going to stay there. Not with the dollar dropping. Remember, all of these commodities are priced in US dollars. And that's going to be the theme of what we're talking about tonight is if the dollar declines rapidly, it's good for our exporters because our goods become cheaper. It's good for the government to inflate away our debt. It's not good for you. It's not good for me. Why? Because it's inflationary. PL, we already did that. Let's go over to oil. Surprisingly, oil is down at current. I think oil is a buy. God damn, natural gas gapping up 18.35%. We booked profits on our natural gas position last week. A little bit too early. We made money, but man, wow. I'm thinking about shorting this. I want them to stretch it a bit further. Wow. This is a big move on natural gas. I mean, take a look at the weekly charts here. I mean, look at this move. I mean, this is crazy. These are right now. It's a 3 standard deviation move on a daily chart. I mean, wow. But it can keep going up higher. That's the thing about commodities. You know, you got to be very, very careful with when you short. I want to short up and into a resistance level. We're not quite there yet. And let's move on. Let's say hello to folks coming in here. Bob, are you interested in any high interest ETF dividends, or do you just look at individual companies that have dividends? All right, great question. So with members, I'm going to be talking about a stock that we're watching this coming week. We'll be putting on a long position. It is a food play. So to answer your question directly, no, I do not buy at current high interest ETF dividend payers. Why? It's because we look to get paid by 2 streams of income. 1, the dividend. 2, share price appreciation. So if you have natural gas just broke support. If you have a high yielding ETF, the price generally doesn't move all that much. When it does move dramatically to the downside, then I would pounce on it, because then it's a liquidity problem. People getting margin calls, they sell those ETFs to bring up to create liquidity. So if I saw a high yielding ETF getting sold off hard out of panic, I would be a buyer. In general, we're buying stocks that have been beaten down and are cheap on a relative historic basis, meaning price to book, price to sales, price to earnings, cheap on a minimum 5-year moving average. So that way we know we're buying right. Even if the market's weak, we know that, you know what, most of the damage has been done here. We're buying cheap. If we get it cheaper, good. And when it starts to move up, then we get paid that big fat dividend plus the net asset appreciation as well. So that's the strategy with the 7% dividend club that we use. And we're going to be looking to add to it this coming week. Good question. TZ Burton, welcome. Okay. Let's check in with equities. Let's go with the NASDAQ opening down. We're short the market, so this is good for us. NASDAQ opening down 0.97%. Very good. I may book some profits at this 21 period EMA because that's a natural support level. Good. Let's take a look at ES. ES opening down 0.66%. The Russell 2000 opening down 0.84%. So, I mean, really, the NASDAQ 100, the leadership group, or was a leadership group. Remember, while we've put in all-time highs on the Russell 2000, the S&P 500, very recently, including the semiconductor sector, the SMH, the QQQ topped out back in October and has been lethargic ever since. That's why we're building a short position. So hopefully this weakness continues into tomorrow morning and we're able to, if we get extremely oversold intraday, we'll scalp some off, reshort on a move up higher. So we're just going to trade a little bit in and out to the short side. What didn't? Oh, I want to go over Bitcoin. Bitcoin really taking it on the chin over the weekend. It is down at current 3.73%, 86,000 on Bitcoin. Let's check out XRP. Down 4.3%. So we do dollar cost averaging into crypto every Monday. So we're going to continue it, every week, like a little kid. We dollar cost average in. That's fine. And that's the way you need to treat these high risk instruments. What else? What didn't we not go over? Let's go over agriculture. ZW. I mentioned last weekend that I thought wheat was going to rip. And man, big move last week on wheat. A lot of millionaires were made last week on wheat. Corn did not fare as well. We didn't expect it to. And my hand-eye coordination is not good today. Soybeans trying to make a comeback here. Looks like we're bottoming out. Perhaps a higher low on soybeans. Okay. Last one up, we'll check in with cattle. I haven't traded this in a couple of weeks, but man, we're holding key support levels. This is going to go up higher. This will probably gap up tomorrow. Dow Jones Industrial Average down 0.53%. Again, another index that just hit all-time record highs, and the triple Qs have been lethargic. So we have a lot of earnings coming up this coming week, and it's really going to set the tone for the triple Qs and how they do moving forward. And a lot of these companies are taking on a lot of debt. To just take a look at Oracle stock, which has just been pounded because all of the debt. Look at this. This is when the government got involved with Oracle. And ever since then, it's been in crash mode. We formed a bear flag setup. We broke that bear flag setup last week. Oracle remains a short. I wouldn't do it into earnings, but it looks like a short. The cable, will you be looking at the TLT trade? I'll be looking at the TLT trade. So to answer your question, yes. The problem is at current is that you have yields on a weekly time frame moving up higher. They have broken out. Now, granted, this is the 10-year, and the TLT is an ETF putting you long or short of the 20-year bond. But for the most part, they're 90% correlated or inversely correlated. If you have rising yields on the 10-year, you're probably going to have lower prices on the TLT. So that being a known, we don't want to buy it yet. I would rather be short the market right now because of valuations, because of headline risk, because of the midterm elections. I think the headline risk is only going to get worse because the insanity that is going on with the far left movement in this country is only going to help or at least they think is only going to help the Democratic Party. So I don't think that we're looking at an easing of all of the tensions across this country. I think it's going to get worse. So, and I don't know what else is planned here for the midterms. I think there's something not good going to happen. I would rather be short the market right now. When don't I want to be short? I do not want to be short the market into April. I want to be out of my short by then. When I get out of that short, I want to be into the TLT. The TLT will probably be yielding, I don't know, perhaps 4-5%. And we just park capital in there and we wait until the stock market finally has its washout. I'm not going to look to get out at the very bottom of any sell-off in the equity markets. I'm not looking for that. My big worry as a short is the fact that you're not going to have a Jay Powell in that office in May. In May, you're going to have Trump's guy in, and they're going to be buying back debt. They're going to be cutting rates. And at that point in time, you're probably going to see the equity markets to begin to move up higher. Once we see that transition from the stock markets from stabilizing to now moving up higher, we want to start rotating out of TLT as our safe haven and into small caps, mid caps, and emerging markets. That's where we want to be. That's the game plan. Polish Taco, welcome. Talon, you're out there in California. You're missing all this glorious snow. So crazy here. Okay, I think we covered it all. Let's just check in with volatility. Volatility sold off of the highs of last week. Let's go to a 4-hour view. And they gapped us up just shy of resistance at a 19 handle. You know, so you really can't, I wouldn't go leaning into the short side right now. I would want to see the volatility index closing above 20. That would make me feel comfortable with adding to shorts. You're very welcome. Yeah, keep in mind, folks, if yields are going up, that means that bond prices are going down. So TLT, not the best place to be right now. Okay. Let's get to it. Folks, we are sponsored tonight by our friends over at TrendSpider. Great company. We had a meeting with them last week. We're going to be integrating even further with them. But when you go over, use the link below. Don't use, they're offering 32% off on their enhanced and premium plans, and their standard plan only 3%. Use my discount code CON35, CON35. You get 35% off. So just a heads up there. I'll be doing a demo of their product in a little while. Economic data coming out this week. We have durable goods coming out on Monday. It's an important number. Durable goods, washing machines, dryers, refrigerators, anything that lasts several years and a big ticket consumer item, durable goods. Consumer confidence, another big number. So we have the Fed meeting coming out this week. So I'm going to make this very, very easy for everybody because CNBC is going to want to have you glued to the TV sets. What will the Fed do? What will they do? They're not going to do anything. They're not going to cut. They're not going to raise. The probability of a cut this month is 2.8%. The probability of a cut going all the way out to April is now below 30%. Equities do not like that. So it all depends upon what Powell says. And right now, he's a guy that is under a lot of pressure. Grand jury looking into him. So I don't think he's going to want to try to stick a thumb in President Trump's eye anymore. Thursday, and I don't dislike the guy. Thursday, initial jobless claims. We get that every Thursday. Productivity, very important. Is AI working? AI is supposed to be the productivity multiplier. Wholesale inventories, factory orders, important number. That's a delayed report. Friday, we're going to get producer price index. This is for December, for Christ's sakes. It's the delayed report. This is all due to the government shutdown, and they're supposed to be shutting down again on Friday because the Democrats don't want to fund the Department of Homeland Security. So I don't want to get into politics, but my God. Core PPI coming out this week. Watch. That's a measure of inflation at the producer levels. Are the producers passing along inflation to the consumer? If they don't, that's going to impact their earnings. If they do, it could impact sales. So, and that's pretty much it. A couple of Fed heads. That is the week ahead. Can you believe this is the last week of January already? Valuations. We closed out the week with a Shiller PE ratio of 40.65. Only one day last week did we close down below a 40 handle on the Shiller PE ratio. Valuations is measured by the Buffett indicator, strongly overvalued. You are here. This is why we are short. This is unsustainable. We are above a 2 standard deviation move beyond the historical trend down here. Do I think we're going to get down here by April? Probably not. Probably not. But I think it's going to be a great time to enter stocks that have good valuations and that have lots of upside potential. So our chart list is a building. So more to come, members. Earnings coming out this week. We have a bunch of stocks here that we own, and they're reporting next week. So let's get to it. Monday, not much happening. We could just skip Monday. Ryanair, I fly them over in Europe. Great, great airline. It's like taking a taxi cab between countries. It's really cool. Tuesday, UNH, we owned that. We sold that. We bought that at the bottom. Nobody else wanted it. I would have kept it if it was a big yielder. It wasn't. It was yielding back 3%. And it hasn't done much since we sold it. We own Boeing. They are reporting on Tuesday. We bought that stock when nobody wanted it. I would not buy it now. It's got RSI greater than 80. So now we bought it when it was oversold. Now we're going to look to sell it when it's overbought. UPS, we bought that when it was oversold. Nobody wanted it. And it was yielding a 7% handle. This is one of our 7% dividend club members. What are the names? We have a bunch of defense contractors coming out this week. It's a really big montage of stocks that are reporting this week. So we got RTX, that's Raytheon, Northrop Grumman. We got some consumer staples plays. Texas Instrument, that's going to be a big one. That can move the market. ASML, semi-equipment play, important company. Another defense contractor, General Dynamics. Starbucks coming out on Wednesday morning. Microsoft after the bell on Wednesday. Meta, Tesla, big day on Wednesday after the bell. You have IBM as well. Thursday, pre-market, MasterCard, Caterpillar. Altria, great company. That's yielding a nice yield right now. I think it's a little over 7%. Blackstone Group, Lockheed Martin, more defense contractors. Thursday after the bell, we get Apple, Visa. They print money. Crazy margins on both Visa and MasterCard. What else do we have? SoFi and Amex on Friday. ExxonMobil, that's one to watch. LyondellBasell, we own. We bought that when that was yielding, 12% around there. 11 3/4 of 12%. And that's moving up higher. So we have, out of our portfolio of the 7% dividend club, we have at least 3 of those names reporting this week. So a big, big week for us here, and members will be talking about them every night on Market Wrap. So a couple of interesting charts here. U.S. freight shipments are collapsing. The Cass Freight Index, a measure of freight volumes, fell to 0.93 in December, the lowest since the 2020 crisis lows. Excluding 2020, the lowest since the great financial crisis. Freight shipments have declined for 3 straight years. This signals weakening demand for shipping and goods movement and a slower economy. Something to watch out for. This is just the probability of, on the poly market, odds of the federal government shutting down. It's probably going to happen. The Democrats, they have to shut down the government. They think it's the moral, well, they don't have any morals. They think it's the right thing to do to keep themselves in office. U.S. car loan applications are being rejected at the highest rate in more than a decade. Why does this matter? This is liquidity. I always talk about this. The mother's milk of any business is liquidity. If you run a small business and you lose access to financing, you are out. You are out. So when we talk about yields rising or the Japanese yen carry trade fading away, that means liquidity is being pulled from the stock market and stocks go down. That's what you're seeing tonight. That's what's happening tonight. The yen carry trade is being pulled away. That is a form of liquidity that has driven the stock market, both here and in Europe, for over 20 years. Also, you have bond yields moving up higher. So the cost of capital is going up. Not good for your small caps or mid caps. It really doesn't impact the mega cap names because they have access to, they can sell stock, they can issue bonds, whatever. So here's the US dollar, Japanese yen trade. These are highly correlated. So here, US dollar, Japanese yen, carry trade weekly chart. You saw a big move lower on this ratio chart last week, down 1.58%. The thing to keep in mind is that the correlation between the US dollar and the Japanese yen and the S&P 500, they trade up together 76% of the time. Think about it. So if the US dollar, Japanese yen trade goes down, that's going to have an impact on equities. And again, you're seeing that tonight. The Japanese yen moved up, dollar moved down. You're seeing this chart right now in real time and the impact that it's having on equities. And here's a chart of the US dollar. Folks, this was not just a failure last week. This was a collapse of the US dollar. We had 3 consecutive weeks of very strong price action and a breakout above strong resistance. And we didn't just check back and do a retest to see whether or not we could validate that it was really a healthy breakout. There was no pretenses. It was a false breakout, and they knocked it down. They sold strength into the following week. And always beware of a breakout on very, very light volume. This breakout was not to have been bought until such time as we got a retest and then a follow through. We didn't get it. This was the quintessential bull trap. And now the dollar is paying for that failure. So what happens next? What happens when you have the US dollar going into free fall and you have the CRB commodity index moving up higher? Well, that's inflation. That's dramatic inflation. So that's what you're seeing here on a weekly time frame. The CRB commodity index, which was helped to break out last week with oil, which had been a laggard. Natural gas really drove this as well. And then you take a look at not just the weekly chart here. This, with only a few trading days left to go, is a mind blower. Take a look at this monthly chart. Let's get rid of the tags here for a moment. The pivot points. This is a breakout. So we have been in a very long consolidation within the confines of a secular bull market on commodities. And we're now getting ready to have that next leg up higher. This is why gold and silver and platinum and palladium are all ripping through the ceiling. They know this. They see this. They see the dollar going down. And now gold is now the world's reserve currency. So a lot of things are happening here that could undermine the health of equities, and that's why we are short the market. Another thing that is helping weaken the U.S. dollar, the U.S. government paid a record $1.267 trillion in interest. That's not principal. That's interest on its public debt over the past 12 months. That's $3.5 billion per day. Interest alone reflects 25% of government revenues. That is unsustainable. That is why they need to have the U.S. dollar dropping so they can inflate away the debt that we have. Basically, we're going to repay our debt with worthless U.S. dollars. Margin debt. As a contrarian, I look at this and I say, okay, if I'm asked what's going to help drive my short lower or higher, in my case, what's going to drive equities down? Well, at some point in time, all these people with record margin debt are going to wake up and they're going to get a call from their brokers saying, you need more money in your account. And in many instances, when you own small caps or mid caps, you may have gone to bed the night before and it said you had $15,000 worth of buying power. You wake up the next day and you have a negative or a zero amount of buying power. What happened there? What happened there is that overnight, they reconfigured the margin requirements on your positions. So what happens is forced liquidation if you do not put more money or sell equities into your account. So at some point in time, I wish I had a moving average here, this has to come back down to the mean. And that is what's going to help drive down in a very, very nasty fashion the equity markets. But once we see this become more stable and we understand that we see bottoming action getting put in the equity markets and the Federal Reserve coming to the rescue, well, then you start rolling out of your debt or your bond positions and back into equities. And that's the strategy that we have here. We already talked about Bitcoin, so no sense in going over that. Here's a chart of Bitcoin, real time. I mean, let's go to a weekly chart here. This is really, really, really bad. This is a breaking of a bear flag setup on Bitcoin. So if you're thinking about, you know what, this is the bottom, I've been saving up, I'm going to go all in on Bitcoin, don't do it. Don't do it. Just be dollar cost average in. Wait for a bullish reversal week. What does that look like? A bullish reversal week looks like this here. This is the exact opposite. All right. What time we got? We have 6:40 in the PM. Let's check out what members are requesting as their chart requests. Okay, we got some good names up here tonight. Folks, again, we're going to be using TrendSpider. Take advantage of that 35% discount code below. Use the link below on YouTube, link above on Twitter and on Facebook. Let's go with Talon and Netflix. So Netflix is reported. Let's begin with a monthly chart. Let's do some overlays here. So on a monthly time frame, we are at current below. Are we? Yes, we're with a few trading days left to go. We can recover here, but we are currently below this support level at around, let's call it $87 a share. We're right there. Now, if we fail this month to hold this support level, we could come all the way down here to the mid 70s. Weekly chart. We broke quarterly resistance last week, and dash line is quarterly support and resistance. We had a bit of a rally post earnings. We could rally up to about 88 or a filling of this gap at 87. But then I think that it's probably going to roll over here and at least give us a retest. Will it break and go down to that 76 handle? Not quite sure. It really depends upon how we close out the month. I'll be looking for. But right now, it looks like we may get some more upside here, perhaps some short covering rally off of this lower band of support, a continuation move up higher, again, to fill the gap at 87 or up to 88.50 per share. Daily view? Oh, we did the daily view. So that is help. Talon, do you want me to go over this chart? Or are you joking around? There's a lag here, so I'll go over it anyway. I don't know. This thing's kind of in no man's land. I would be okay with putting on a trade here, like a small speculative position, and I do mean speculative. But if we fail to hold 713, I would be out. I would add more on a close above $8.18 and ride this rising wedge up higher. We're at daily support again, folks. I've never gone over this stock before, so I'm using the automated trend lines, and you can see how accurate they are. So this is very speculative, tight stops. I'm fine with the speculative initial probing trade, add on strength as we always do. Tesla. I think that Carney backed off of that China deal after Trump's threat. They were going to bring in all sorts of Chinese EVs, and I've been warning, those Chinese EVs. I was over in London. I was in one of the Ubers there. Pretty goddamn nice car, and cheap, much cheaper than Tesla. What kind of quality you're going to have after 5 years? I don't know. Probably horrible, but they could certainly do damage to Tesla in North America. Now, last week we had a bullish reversal bar on Tesla, which is very positive, meaning we were trading lower, below support. In fact, the week prior, we broke down and they reversed it to close back up. Now, they're reporting earnings this week, so, you don't know what's going to happen after earnings. It's in God's hands, whatever happens. I can't stand these guys that come on CNBC and they say buy a stock in front of earnings. Now, why? Why take the risk? It's crazy. So it looks good here on a weekly chart. If I were going to initiate, I would do it after earnings, and I would wait for a retest of 440 per share, tight stops, and then add more on strength, daily view. Where's my volume? Volume last week was okay. Yeah, it wasn't good. Scratch that okay. It was poor. And you saw a decline in up volume on Friday. So to me, this is not institutional accumulation of Tesla. It's more of, the stock looks beaten up. I'm going to go and I'm going to buy it and hope for the best. So I would wait for the retest of support, and I would wait until after earnings. Polish Taco. Let's go to comments here. Oh, help was Sean's. Gotcha. Okay, I misread. Thanks, Town. Adam Target released a video today with him interviewing Rick Rule. Rick Rule is very, very good on energy and metals. Yeah, he gets some good guests. I like Rick Rule as well. You're welcome, Sean. With EVs, you can't safely dispose of the batteries. Yeah, there's going to be a day of reckoning when these things start expiring. I do not know if they're closed tomorrow, to be honest with you. I kind of tend to doubt it. If somebody knows, can you please let me know? I'd appreciate it. Let's go back to our regularly scheduled programming. And we have rig for Polish Taco. Let's go macro, monthly view. I happen to like energy here. Rig is not quite, well, it is. It is above resistance. I would give this one a few days. I would want to see whether or not we're able to close out this monthly bar above 480 per share. Where do we close on Friday? 483. So we're only 3 cents above a critical resistance level. Weekly view. Here's a better view of that resistance level. Let's overlay some trend lines. We broke through some real serious resistance last week that's very positive. If we close above here, especially if we get a retest of 479 and we get follow through, I'm buying. And if oil moves up higher, this is going to be very, very heavily correlated with oil. So if oil begins to break out, rig is probably going to break out. Watch for that correlation. So I'm bullish here, early stage on rig. Friday, not really a good day. We faded off the high. You had some daily resistance levels here. And this is the value of the automated trend lines. Okay. Adobe. I haven't gone over this one in a while. This stock got hammered. All right, so Adobe remains in a bear market. To me, this monthly chart implies that it wants to go lower. They don't report for another few weeks, but right now, as it stands, we've been rejected at a resistance level. We're just off the lows of the month, and we have put in new monthly lower lows. So in a situation like this, I do this. This was kind of a shallow bear flag setup, and at current, it looks as though we're going to break that bear flag setup and move lower on Adobe. So I would avoid this right now, and it could quite possibly, if you get a retest next month, if we do in fact fail to hold this line here in white at 324 per share, if we fail to hold that, we do a check back, you're going to get shorts that are going to be leaning into the short side at that level, because that's what I would be doing. What I would do here is I would sell call spreads. I would be good with selling Premium, that's a way to do it. Put on a strangle. So that's what I would do here. I wouldn't buy the stock. I might short it, but I would be more happily being in a neutral bet, selling strangles, collecting premium on the stock. And I think that was it. I want to go back, and we have a few minutes left. I want to make sure I didn't miss anybody. I did not. Okay. Let's go back. Let's see what's going on here. Have we settled down? NASDAQ has bounced back a little bit. Let's check in with natural gas. Still holding in there. This is a classic example of just because you're trading above the third standard deviation Bollinger Band doesn't necessarily mean that it's a short. So it looks as though we're going to press up high here on natural gas overnight. I do think we're going to get an opportunity to short this at some point in time, just not yet. Gold up 1.10%, still above 5,000. Silver up 3.55%, holding well above 100 now. But keep in mind, folks, these are really, really overbought. Really, really overbought. Palladium, which is not overbought, and I happen to like, up 1.62%, holding in there. Let's check in with oil. Oil still down, bouncing back a little bit. Lastly, let's check out the US dollar, which has bounced back some. And you can see the correlation. Let's bring up the Japanese yen. Because the Japanese yen has pulled off the highs of the session. And what happened to equities? They drifted up. So don't forget about the impact that currencies can have on the stock market as well. It's not just interest rates. At current, it is a liquidity concern. The Japanese yen carry trade, that's a big problem if that gets pulled away. So if the yen strengthens here, which I think it's going to, equities are going to roll over yet again. And that's it, folks. Everybody have a awesome remainder of your Sunday. For those that are snowbound like me, stay warm. Have a profitable trading week. Don't forget about TrendSpider, 35% off. Link below on YouTube, link above on Twitter, Facebook, and get 35% off. Have an awesome week and a great night. Be well.